Hey, what's up, everybody? How goes it today? Today's date is July the 13th, a Saturday, and we're going to try to do a great technical analysis today to keep everybody up to date with exactly what's been going on and what you need to know. I know that the market has been in turmoil and it has not been the most ideal conditions to trade or to even be interested in the market, but unfortunately, not every single day is going to be the best days. There are going to be moments in the market where you're going to heavily doubt yourself, and especially why you're in crypto. These are the most uncomfortable moments that will allow you to grow and persevere through this adversity in crypto. So, welcome everybody. My name is Philakone, and I've been in the crypto space now for about 9 years. I've been through two major bull markets and also two major bear markets as well. I've learned a tremendous amount through both of these bear markets and bull markets. And because of that, I'm here to provide you with the top quality and the best possible technical analysis so you can have various perspectives from professional traders and investors that have been in the game for a very long time now. I started with about $2,000 back in 2015 when I was trying to trade, and it took me about 2 years until I finally learned a little bit to start seeing some of the profits and the hard work pay off. So let's take a look at the market and see exactly what has been trending. Let's start off by talking about the 21 exponential moving average, which is very popular, used by traders and also investors to identify trends and also potential reversal points. It's also used in the weekly chart for the bull market support band as well. It's going to allow you to identify trends and supports and resistances. It can be used as a momentum indicator as well, and it can also signal entry and exit signals as well. And using that with other confluent indicators, it's going to make you more well-rounded and give you the best possible information. So I'm using the 21 exponential moving average because it's one of the best support bands that you can use. The ones that I use is the bull market support band. You can just go to indicators and type that in. So the way that this works is simple. It's this one right here by ZK Dev, bull market support band. It's using the 20 weekly SMA and also the 21 weekly EMA. So when you turn it on, regardless of what time frame you have it on, it's always going to show you this support band from a weekly time frame perspective. So this guy's a weekly chart. So you can see that in a bull market support band where we're going to the upside, you're going to see the 21 EMA act as a support, and then the 20 SMA will be above it. So you can see here that the red, which is the longer one, the 21 EMA, the red will be on the bottom and the green will be on the top in a bull market. And you can see that after the halving period ends up starting, after that we see significant ROIs. So this technical analysis will be here to argue a potential $48,000 to $50,000 Bitcoin scenario. Now, that's something that not many people want to hear. In fact, when they hear of a $48,000 to $50,000 Bitcoin scenario, people get tremendously upset and irritated and angered by it. And it's important as an investor to see it from multiple perspectives. Now, I understand that I might not be right about this particular scenario, but another thing that I understand strongly is that my perspective on the long-term outlook of Bitcoin, especially when it comes to calling significant supports and resistances, has been more than 80% accurate in the past 9 years in crypto, and specifically 7 years on social media. So yes, there is a chance that I will be wrong, and if I am, I will be humbled by that experience, and I will also gladly accept responsibility for being wrong. Now, my job is not to specifically tell you that Bitcoin is going to get to this price. My job is to inform the public why I think that it could get to this price. And it is your job to consider various perspectives from multiple analysts, including your own as well, so you can formulate an intelligent bias and perspective yourself. The most profitable traders and successful investors long time, they're not people who are going to watch technical analysis on YouTube and follow other people. They will do that combined with formulating their own opinion. And it is only until you understand that it's your money, it's your responsibility, it's your decision, it's your choice, it's your risk management. And once you accept this responsibility that you are in sole control of your profit or your losses, it's only then you're able to truly grow in the crypto space, and especially as a trader and investor as well. So we can see here that after every single halving period that occurs, 2012, 2016, 2020, what we see is that there are going to be major periods of crossing over from green to red and red to green. And the bull market support band is not the best indicator to use to find specific entries or exits. But what it does do, since it's a lagging indicator, is it gives you a general direction and degree of the trend despite it being a lagging indicator. So you can see here that after the halving period occurred in 2012 here, you can see eventually it crosses over, red is on the bottom, and it supports the entire uptrend all the way to basically near the end of the bull market. But in that particular year, in 2013, it needs to be heavily understood that there have been periods where it turned bearish. So this here is a bearish period where the trend seemed like it ended. That's one example that I'm giving you to show you that the bull market support band did get fairly bearish. Not only did it get bearish, but from the top, it actually ended up drawing down about 75% before it ended up resuming again. And then eventually it ends up reaching a top. So please understand the significance of that we ended up becoming very bearish for a short period of time. Now, the other example that I'm going to give you is after the halving period in 2016 and also slightly before it as well. We can see that after this halving period occurred over here, there was a significant period of a bearish trend for basically 413 days till we reach the bottom. So there's always a 4-year period from what we have seen so far. There's a bull market year, and then after the bull market year, there's a bear market year, and then after the bear market year, there's the year after the bear market year, which is like a slower period generally. And then after that period after the bear market year, there's the period before the bull market. So there's the bear market, the bull market, bear market, year after the bear market, and the year before the bull market. And every year it has cycled in this exact way so far. Now, it would be naive to assume that every single cycle needs to be the same. It could be the same from what we have observed thus far, but it doesn't necessarily mean that it's forced to be this specific cycle. If it were that easy, everybody would be making a tremendous amount of profit. That's not the case. So we can see that before 2016 over here, there have been also major periods where the bull market support band is going to cross back and forth, back and forth. So here's an example of a very bearish period. So the red on the top is a very bearish period. So here's a bearish period over there, red on the top. So this is slightly before the halving period. And even after the halving period, there have been also periods where it got bearish as well. And also keep in mind that there have been also other periods where in 2017, it literally nicks the bull market support band before it resumes heavily. And then you can see that it even hits it multiple times again. So even though the halving occurred, what we can conclude from 2012 and 2016's halving is that there are still periods where it does get below the bull market support band heavily. Okay, so now we've confirmed both cases after the 2012 and 2016 halving period. Now, after the 2020 halving period, we can also conclude the same thing, and also before it as well. We have seen periods where it got very bearish over here, where the red is on the top. And then after that, in this year, it ended up staying bullish for a long time until it got bearish again during this period before it resumed. So before the halving period and also after the halving period, we're concluding the same behavior and observing that. So we basically confirmed it for all three halving cycles thus far. Now, here's the halving cycle that occurred in April. And what I do firmly understand is that this halving period is significantly different than other halving periods due to the fact that we ended up breaking to a new all-time high before the halving period occurred. That has never happened in the history of Bitcoin before. So for example, we can see that before it made an all-time high in 2012, and at the halving period, we were actually very far off away from breaking it. It wasn't until much after we broke the all-time high of the previous bull market. And the same thing applies for the previous bull market as well in 2017. Before the halving, we were well below the previous all-time high. And that happened twice. And what we can see here, though, is that after the halving in 2024, this year in April, we have a higher price than the all-time highs, the previous one. So it's a very unique type of cycle that we're having so far. Also, this 2023 year was very different than other years. If you take a look at the monthly returns table, and we're taking a look at 2023, and we also take a look at 2019 and 2015, we can conclude that 2015, okay, so 4 years at a time. So 2015, 2019, and 2023, they're all the years that's kind of the in-between year. The one after the bear market year, and basically the 2 more years away from a bull market that occurs. So you can call them equivalent years. You can see that in 2015, we had 1, 2, 3, 4, 5 bearish months. In 2019, we had 1, 2, 3, 4, 5, 6 bearish months. Bearish months. In 2023, though, we only had 1, 2, 3 bearish months. 2023 was a great year. It was one of the years where the majority of people made a tremendous amount of profit. So because of that, it being a very different year, 2024, which is the year we would expect it to be a bull market, what I would expect is that 2024, 2019, 2015, they're also equivalent years as well. But due to the fact that 2023 had such a phenomenal year, I would expect a little bit more downside in the 2024 market right now. So in the equivalent years, 2019, there was 1, 2, 3, 4, 5, 6 red months. In 2015, there was 1, 2, 3, 4, 5 red months. So these are very similar, or I meant 2020 and 2016. I correct myself. 2016, we had 1, 2, 3, 4 red months. 2020, we had 1, 2, 3, 4 red months as well. Right now, we've only had 3 red months, and there's still literally half of the year to go. So I wouldn't expect that we're going to have 6 green months in a row. There's more likely to be some sort of downside, okay? So I've just proven the case that the bull market support band, we end up oscillating very significantly whenever we see it. Now, another significant factor is always going to be the 50 EMA. And you also combine that with the chandelier exit indicator. The one I use is the one by Everget. What we're seeing is that they tend to be very closely aligned with each other. And unfortunately, you can see that the 4-day ended up closing already. So unfortunately, the 4-day, actually, I'm on the wrong one. My apologies. That's not the best chart to use. Let's take a look at it from Bitcoin on Binance, okay? There, this is better. So you can see that Bitcoin on Binance, we're literally right at the cusp of trying to figure it out. We're staying above the 50 chandelier exit and also above the 50 EMA slightly right now. What we've seen in history is that there are multiple periods where the price action is going to get, actually, let's go back over here. It's going to get slightly above or below rather the 50 EMA and also the chandelier exit. You can see over here that there have been monster dips before the actual halving period occurred. That's, for example, in 2020. If you take a look back in also 2017, you can see multiple times that, yeah, the 50 EMA did hold, okay, for a long period of time, but the chandelier exit ended up getting red over here. It hit it over there. It got red over here as well. It got red over here as well. And these are in bull markets, okay? So that if that was the case in 2017, we can probably argue the same case or very similar case in 2020. And in 2020's case, we can see that it actually ended up staying above it the whole time. But the thing is, before it ended up having a significant drop before the 50 EMA and also, or below the 50 EMA and the chandelier exit. Not only that, after it topped off significantly, it fell way below the 50 EMA and also the 50 or the chandelier exit on the 4-day chart. So in my opinion, just from what I've demonstrated here, there's definitely a possibility of breaking well below it for a period of time as well. Okay, so why would it not have a possibility to break if it has before? And in my opinion, the best support that we'll possibly find is above $48,000. Because the reason for that is because this consolidation period lasted for like 2 months, where it ended up rallying about 46, we'll just say 50%. So that's a huge retracement upwards. Not only that, this is also a significant resistance over here. So I would argue that above 48K to 50K would be significant. Many people are calling a support above 52K, and I can see that as well based off of multiple points before, such as this one as well. It's where liquidity is, and maybe this tiny little guy over here. So if I had to choose a support somewhere, I would say there's a chance to hold above 52K, but specifically a higher chance to hold around the $48,000 region. Now, even though we might not drop specifically from here right now, there's a chance to rally to the upside for a relief rally as well. But it doesn't change my bias that we've seen very bearish trends before once things have broken, especially because this bull market support band has broken already. I just cannot see it bouncing to the upside right away as soon as it ended up breaking. Usually when this bull market support band ends up breaking, there's a significant downside in return, also for a significant period of time. You can also see that the 50 EMA on the weekly, which is the yellow line, also the 52K, also the 48K, it just makes the perfect zone to catch the price right before we resume our rally again. So do I believe that Bitcoin found the support at 58K? No, I really don't. Do I think it's going to drop further? I do, but there could be a relief rally first. How long will this drop or consolidation period last? I think it could last a period of anywhere between 2 to 3 months. I don't think the market's going to move until Q3. And trust me, I understand a lot of people would say things to me like, Phil, what about quantitative easing? What about the federal election? What about rate cuts? Yeah, I'm aware of all of that. What about the ETF approval? Some people are like, oh, Ethereum's going to skyrocket because of the approval. Well, what you guys don't understand, what maybe some of you do, is that Bitcoin was on pace to get approved, and the anticipation for Bitcoin's ETF approval in October, when they were appealing it with suggestions, the price was already factored into this entire rally. Just because it gets approved that day doesn't mean it's going to skyrocket. You have to remember the anticipation to get approved, and the price is reflected into it. Just like how Ethereum's price to get approved has been reflected in the rally as well already. So I don't think there's going to be a drastic change once it gets approved. Look at Bitcoin. It ended up rallying just for a little bit, and right after it got approved, there was a massive dump anyways. So just because institutions are now offering it and also accumulating Bitcoin heavily, it's not enough of a catalyst right now until the end of the year, in my opinion. So there's rate cuts coming up, there's elections, there's quantitative easing, and regulation is going to play a huge part of this. And of course, the Trump administration is likely going to be very pro-crypto. That's going to help a lot as well. So I just cannot see the market rallying until quarter four. If I said Q3 by accident, I meant Q4, okay? So I'm talking about October, November, December ranges. I still see potential downside, and unfortunately because of that, you guys are going to have to spend a little bit more time in that uncomfortable zone. And because you're there in the uncomfortable zone, please understand that it's important for you to put in a lot of the work to study and to be investing your time in developing your skills. Many people will just sit on the side and wait for better days to come, but you have to put in that work, especially if you are newer in the market and you have not made a substantial amount of money yet. The people that put in more work and more effort into learning about all types of markets and trading in every single market, you are going to be the ones that are ultimately more successful. So because of that, guys, I decided to have this sale going on till the end of Friday next week. That's when I'm leaving for Montreal next weekend. So I'll be gone for like 10 days. So I wanted to have an 80% off sale. With this 80% off sale, you will probably be 95% ahead of people when you finish the courses. And you will have the amount of resources out there to truly catapult yourself to the next level. So if you want to take your crypto and trading career to the next level, this is for you, especially with a huge discount like this. You're going to get 4 things. One, you're going to get my 10-hour day trading course. That's going to teach you how I was trading in the millions of dollars before and all of the strategies I plan to use when markets are better. So a beautiful day trading course. Second thing you'll get is the 2024 Investor's Guide to Crypto. You're going to learn about all of my picks and how I'm managing my portfolio and why I chose these coins right now. Third thing that you're going to get is access to my Discord group for life. It has a library of resources and tons of members in there. It's probably one of the biggest resourced Discord groups in the world. You will find more information in there than anywhere on YouTube or on the internet. And the fourth thing that you're going to get is access to my advanced range volatility scanner that you guys have all seen before. This is going to tell you when the market is very hot, and it's going to highlight things green when the market is moving. So you can see here that there are every single coin on Binance that's listed, and anytime there's volatility that moves, for example here, you can see bond has been moving. So this is going to detect anything that moves 5% in 2 hours, 10% in 4 hours, 15% in 24 hours, and 20% in 2 days. You can also customize the volatility to whatever percentage over whatever time you prefer. So anytime anything moves, you're going to catch it. This volatility scanner cost me tens of thousands of dollars to develop. And it was designed with 2 things in purpose. So it was designed to, one, allow you to instantaneously find any type of volatility in the market. If it moves, you're going to see it. And the second thing it was designed for is to give you a gauge of how the market is. You can see that most coins right now are green. And because most coins are green, the market it's all right. It's like kind of sideways, but a tiny bit more bullish than bearish because it's more green. But because not many coins are actually highlighted green, that means that the market kind of sucks still, okay? So just to conclude everything right now, that you guys are going to get everything for $300 instead of $1,450. And many people, they lose everything in the market. There are people who DM me and they're like, oh man, I just lost $200,000 trading. And I asked them, like, have you ever taken a formal course before or tried to invest a little bit in yourself and your skills? And they're like, no, I haven't. So you want to spend $200,000 day trading to lose everything, but you won't even spend a few $100s trying to learn about the market? That makes no sense at all. You should be spending a lot of this downtime learning how to prepare for the markets, learning from professionals out there. So definitely check it out. The link is below. And just to conclude, guys, we've broken below this 21 EMA on the weekly, and we're likely to stay down there for a while, as proven after every single halving event before. So I think that we're going to get anywhere between 48 to maybe 52K, but realistically, I would average at around $50,000 would be a very good support. And that also coincides with the 50 exponential moving average that I think we're going to get to right around this region. So let's just call it here, 48 to $52,000. That's my call. Bookmark this, save it, and I'll see you guys there. So thank you very much for joining me. If you have enjoyed these types of technical analysis, just make sure you guys are subscribed to me and hit the thumbs up button just to let me know I'm doing a great job. Have yourselves a great weekend, everybody, and thank you for tuning in. Bye now.